Good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, September 27th. Michael Boutros here with you this morning. Great to be here. Carlos, DJ, Gita, Jatu, Pete. Whole bunch of Pete's today. Peter Axe is here. Peter Green, Pooja, Steve, Ziad. Great to see you guys all in the room. So on the list for today, obviously we're seeing the dollar continue with that move higher that we've been favoring. Was almost too clean for comfort yesterday with that break above the 618 and continued hold of support. So we're now challenging the first initial target that we talked about last night, which was I think 93.52 if you look at the chart right here. So that's the June low day close. Again, subsequent break could see this into 94, but I'll show you some stuff here near term that might be a little bit alarming as far as the long side, but everything still looks good as far as the crosses. Euro did make it to our target from the swing trades just now, extending into that 1735 target. We'll go over dollar CAD, Aussie dollar, dollar yen from last night, and then we'll touch base obviously on the euro, Kiwi. The RBNZ interest rate decision is on tap just after the close of trade today, so we have euro pound also on the list, and gold. If there's anything I didn't mention or any trade setups you guys want to specifically review, as always, feel free to throw it right on the message board. Pooja says, hi, I just tweeted you a chart on euro dollar. With that kind of momentum, are we going lower? Let me see what you just tweeted here. Is that an ugly head and shoulders break? Yeah, it could be. It absolutely. So I'm going to share this with the team here. This is a chart that Pooja just sent through, and I think she's got the right idea, okay? Could be left shoulder head, right shoulder. I've seen this interpreted a couple of different times. The break last night is essentially the confirmation that we got, and I do think it's heading lower, Pooja. I think near term, with respect to the swing trades, from a longer term structure, there is a trend line I'll show you that we're testing right now. But yeah, I think the propensity or the risk is for a drop just a little bit lower. It's below 117. I like that level that you have. I'll show you my chart in a moment, but definitely a possibility. Definitely a possibility. Peter wants to look at silver. I got you. I haven't looked at that chart in a moment, but we'll see where it's at. Okay. And as always, guys, anytime throughout the session, feel free to throw them on the message board. So let's get started real quick with the dollar index. Here's what it looked like last night. I had the weekly or the daily and weekly chart for that matter presented here to you guys last week. But anyway, let me just focus on what we saw last night. The break here is what the focus was. The target on the break on the upside was 92.95 into 93.05. I think I had it. 93.06. Okay. And early in the week when we first opened this session, that was basically converging right here on the upper parallel or basic channel resistance. Again, we only have two touches here. So this was the first touch and real test of it. You don't want to stress this slope, but the long and short of it is topside break of an ascending sort of pattern sees acceleration. So you saw that break above that support or above that resistance. We tested it as support, okay? Even on an outside reversal candle. Right off the highs, it slammed right into that support and held like a rock. And here we are testing the next upside target, 93. I think I had it at 93.52. We're checking 93.49 right now. So, excuse me, you could see a little bit of a resistance here, a pullback. I'm looking for exhaustion into 94 if we can get up there. I don't really want to try to test it from here just because of what you're saying. The momentum is picking up. You see that momentum is an overbought here on the 240-minute chart. Going to the 120, we're still an overbought, albeit showing some divergence. And on the daily chart, the reason I don't want to, or the reason I do want to try to look lower from here or look for an exhaustion is this slope. But again, there's still some room in here, okay, for some further upside on the dollar before it fizzles out. So let me just move this out of the way, kind of give you a picture. Kind of look like 93.60, 93.70, still a possibility. And also keep in mind, we probed into this region, was perfect support here, perfect support here. We did dribble it a little bit lower. The break did see acceleration, and this is the first test of it on the underbelly. Okay, these are all slopes of the same parallel, just off these two highs. Okay, and then obviously the high that we made back in October of last year was a really nice touch of base here, touch base here. So There's a couple of different reasons. I don't want to like necessarily get too excited at this juncture. The bullish call was great. We did awesome. But now, a little bit of caution here. Excuse me. The only other thing I do want to note, and I kind of threw this in yesterday's piece, is that objectively, guys, this is a break of the monthly opening range high. This is what the opening range high is. Now, it wasn't a very conviction break. It did push through that 2016 low day close, but the close wasn't too far above the actual monthly opening range high. This follow through certainly suggests, again, objectively, aside from what Mike Boutros or Jamie Setley or anyone else thinks, it's broken the opening range. You look for that late month high. So, immediately heading into the U.S. session, you are at near-term resistance. If you're holding long exposure, it wouldn't necessarily hop out, but I definitely would be bringing in my stops to a little bit more of a protective stance at this point. Okay, next upside is 94, and like I said, ahead of that 94 target, you have those median lines there, which kind of give me a little bit cause for concern, maybe interrupting the advance. But everything still looks constructive. We came off some strong divergence, momentum. It's been very supportive, holding 40 as support on the downslope here on the rebound that we made. We're back in overbought territory. Do think we can get some kickback. Wouldn't want to get aggressively on the short side of this just yet. Okay, wouldn't be too surprised if we do see, that late month and at this point late week high in price before this fizzles. So where does that leave us for the euro? And a great question and a great chart that Pooja shared. We'll look at that in a moment. Any questions here on the index? As I said earlier in Sunday's update, with what's been going on with the majors, we want to take every trade on their own merits. Okay, we don't want to kind of work with a carte blanche opinion about the dollar in general. Specifically with the index being so heavily weighted, the euro kind of does give us a little bit more of a tell on that trade. But make sure that we're taking every setup on its own merits. Okay, that's DXY, number one. Still constructive, but coming up against some areas here you might want to keep an eye on. Let's jump. I guess I'm going to segue real quick into euro first, since we already started talking about it. Here's what the euro and dollar looks like, and here's what euro looked like on the intraday charts earlier in the week. Okay, so again, the support barrier that we were looking at was 118.26. That was the initial sort of target that we talked about. A downside break, 117.79. We've broken below that, and 117.54 was like the last target that I have on the intraday charts for you guys. And that's at the 786 retracement. So we've gone through that. And Jamie's target at 17.35 just got taken out. But look at what we're looking at here on the broader scope. Okay, this longer standing median line formation extending off the lows from 2015 and the 2016 highs. Okay, the 50 line on the bottom, a little messy as resistance, but once we gapped through it, was a perfect launching point for support. That's this blue line you see here. The median line, a little messy, but once we finally clear it, acceleration. The 50 line, decent resistance with a break, support. That's where we're trading right now. That was the objective that we were looking at as far as the daily chart and the swing trade. Now, can it go lower? Yes. The daily chart certainly, in my mind, highlights 1679 or just thereabouts, just above, maybe 1690 as a region of interest. Obviously, you have the swing lows from back here in August. But this is a basic 236 retracement, guys, of the advance and the 50 line of the embedded pitchfork, which has been so clean in price. Okay, specifically on that lower parallel support for like 4 days, 5 days straight. And again, that converges on a basic 236 just below 117. So yeah, I think it could slip lower, Pooja. I'm with you on that. And certainly the head and shoulders break, a lot of people are looking at this point. This is when you actually do want to kind of take a stab at that as being a measured objective target. Again, I always take the more, conservative sort of approach. And if you do that, just a conservative head and shoulders neck break, that does give you a target a little bit lower even. at the lower parallel. And that would be the risk on like a bigger drop here in the euro. First things first though, okay? And I don't want to get too excited with these head and shoulders and formations and such, and they can be very helpful. We're bearish. We have our support targets in view. Yes, the measured move would take us down to that 116, 115.80 barrier. But first things first, right? We take it on step by step across that bridge when we get there. Right now, any short exposure that you do have, in my humble opinion, again, I'd be looking to shave a good portion of that off as we get into 117. Near term, here's what it looks like on the intraday. Pooja, does that make sense? Nice chart. Here's what the daily chart looks like. Again, within the confines of that ascending median line formation, we talked about that 50 line. Again, that 236, just a little bit lower, sort of around 117 is the next downside support target I would look at. And point in fact, it looks like we did actually have that drawn. I guess we drew this earlier in the week. Was it on the... No, it wasn't on the last update because it was deeper here. But yeah, there's that 200% extension or the measured move. Now again, this is using a little bit more of a liberal sort of bigger bite. If we just take the smaller of the range, 1580 is where I'd look to kind of take the rest of that if there's anything left on the table. But right now, yeah, I think we've pushed through. Intraday, this would be a level I'd be looking at. And you can see if you just look to the left with my cursor, just a basic pivot in price, irrespective of that median line. What do we always say? Downside break of a descending formation, typically going to be your sharpest part of the move. And I think that's what we're seeing here, both in the index on the upside break that we saw last night and in the euro dollar on the downside break that we're seeing here today. Jitu says, where would you put your stops on current shorts? So it depends where your entry is from, Jitu. If you have entry north of 118.26, I personally would put it up against the Asia highs, or the European highs rather. If you're short from anything, below that, I'd have it at break even at this point. Okay, north of 1826, you have a better position, so I would just bring your stops into profit. If you're short below that, break even is kind of where I would be. He says 119.60, nice entry. So yeah, I mean, again, I can't tell you exactly what you want to do, Jitu, but in my opinion, on a position like that, I would have it just above 118.26. You're locking in, well over 100 pips. And if it does cross back above that barrier, you have so many swing lows, you have the 618, it would kind of invalidate the basic breakdown that we're seeing here. So that would shift my opinion for sure. He says 118.30 it is then. Thank you. Hey, cheers, man. You're targeting 116.20. Okay. So I like that level because it's just ahead of the 2016 high, which is 116.16. So it seems like a decent target. Just watch this region here. Oh, I'm losing my voice there, guys. Sorry. G2, watch this region here for a reaction. That's all I'm going to say. Just on the Fibonacci consideration that's there and the slope line that's there that we've already seen some reaction to previously, it's an area of which you might see some kickback. So if you're willing to sit into that little bit of a rebound, that's fine. But look for a reaction here. If this straight gives out, yeah, I think you're on into 1580 or, that longer measured move even lower into 1550. Make sense? But at this point, I'd be comfortable, guys, bringing down our bearish invalidation level down back to that 1826. Let's call it 1850, basically the median line. As long as we stay back below the median line, you have to be looking for that stretch lower. Jitu says, yes, thanks. More than welcome. Pooja says, yes, thanks. Just intraday momentum made me think lower, but maybe a bounce before that to short again. Well, certainly if it does find a decent bounce, Pooja, I would be looking to get into that position. But yeah, you're on the mark. You're on the mark. Definitely the momentum being in oversold territory on multiple time frames. Typically I'll kind of hold on to that trade. And guys, don't feel, obviously we want you to be rigid with your risk to reward And sort of the levels that we put out, always keep into mind, are broader as a strategy risk to reward ratio. But when you see the markets running, don't be afraid, guys. If the market runs through one of the targets that we provided, go ahead and let it sit. If it gives you a decent distance, bring the limit down to that target. Okay, you're locked in at the designated amount that we were looking for, and see if it rides. You know, trading is never a vacuum. We always need to be ready to adapt to what the market's doing on the near term. So I hope that offers some color there. But near term, or longer term, rather, I should say. That median line here is what me and Jamie were looking at. That could offer a little bit of a bounce. So be mindful. At this point, you want to be being more protective, not necessarily adding new positions. Okay, questions on Euro before we move on. You got Draghi on later. One of the bigger things that we read in yesterday's piece that we were talking about, some of that fundamental research we were reading from Prattle, is that we do have that meeting on Friday with Mark Carney and Mario Draghi, in which they're going to discuss how possible impact Brexit will have on economic markets, economic conditions rather, and all this. So that's likely to be the bigger one, but just keep in mind, I did in the previous update, if I'm not mistaken, provide you with this. Again, just keep this in mind. So today you got a whole host of, again, speakers from the Fed. You got Kashkari, Bullard, Rosengren. Then we also have, obviously, the BOC is going to be on tap. The biggest thing is going to be the RBNC policy meeting. We'll go over the Kiwi dollar before that. But a good calendar just to have in mind, guys, to see if you're involved in any of these pairs, might want to pay attention. Okay, moving right along. That was number 2, euro dollar. Spent a good amount of time on that, but I think it warrants some attention here. You guys made some great points. Number 3, dollar CAD. So for dollar CAD, if you didn't hear the sarcasm in my voice in yesterday's piece, you probably weren't reading hard enough. It was too picture perfect. I had problems trusting it. Now, you did get a decent pullback off the level of 40 pips or more so, but here we are right back again. So recall, we've been looking for a near term, or we've been looking for the advance in dollar CAD all week long, I guess all month long, essentially, for this point. And this point, represented on the daily chart, is a pretty big level, 124.15. It matches up almost dead on with the lows you made here in July. Is it a longer-term 618 extension from the decline off the highs that you made here in 2016? And you had that long-term trendline support off the 2012 lows, tagged again in 2013, tagged again in 2014. The break certainly fueled acceleration. And here's the underbelly of it, converging on 24.15. Okay, so it's a level of which, I'm definitely looking for some resistance here. Momentum has been bearish. We're still holding below, we're still struggling to try to get above 50 rather. But the only issue I have is, again, do we really want to fight the dollar strength that we're seeing here? And yesterday turned, literally, guys, 2 pips ahead of the target before moving lower. So I haven't been in this. I do want to be in it. But here's the one thing and the caveat I want to note. I'm split. It's 24.19, 24.20, or 25. That's a big range. For an intraday guy like me, that's an 80 pip range. I don't want to be on the other side sitting it out. So I want to highlight, 25, 24.70 as a big, big range. I'll bring your attention to the fact that initially and objectively, it is the monthly open. Okay, here's the open right here at 124.80 or so. Secondly, it is a basic 236 retracement of the yearly range. So if we take the high that we made back in May and the entire yearly range, a basic 236 Fibonacci consideration takes into 24.70. Add to that the slopes that we've been following on the daily chart. Okay, right here. Boom, just these 2 highs, literally. We took that slope, extended it off this high, gave us perfect support. The break saw acceleration. Extending off that low was perfect support, break saw acceleration. That same line converges on that same region. And if that wasn't enough, the intraday has a basic 618 retracement of the decline just from the monthly highs of August. So either way you slice it, I'm very indecisive here, and this is my problem, is if we see failure in U.S. trade session today, I'd be willing to take a stab with a short at this. Ideal scenario, one last spike, fake out, and then tumble. I don't know. Which is why yesterday I said to you guys, look, stress the weekly opening range. It's well set below a major key level. Those are typically your best opening range plays. So you have an opening range low of 23.12. You have an opening range high of 24.15, let's call it, 24.20. Let's just call it the resistance range we were looking for, and look for the break. If you do see that top side, a quick rally towards 125, 124.80 wouldn't be outside the realm of possibility. I still would be looking for possible entry on the short side. Okay, if we don't get a chance to short this, or this thing does fail here and moves lower, the break below 123.13, like I said, sort of solidify the move. You'd be looking for a basic trendline support move. 618 would take you into basically 22. All right, so little hesitant, but looking for exhaustion at one of these two levels, basically, and watch them into the end of the week. Most of the pairs that we just looked at have broken not only their monthly opening ranges, but the weekly opening ranges to the upside as well. This has not. Despite the dollar strength you're seeing, it's not really able to make much progress here above 24. So let's see what the U.S. opening range looks like. Here's what it looks like on the 120. Again, just a rock solid region right now of critical importance, and it's also 124. It's just a basic psychological level. I mean, you can see that price has reacted here before. So I'm watching this one like a hawk. We want to see some divergence. We want to see some exhaustion. We want to see some sort of sign that we're going to hold this key resistance here. Any questions on dollar CAD? Keep in mind we get crude inventories today as well, later this afternoon, so we could see that start to shift things around a bit. Okay, that is number 3, dollar CAD. Let's move on to number 4. Here's what Aussie looks like at this point. Continuing to get hammered here. I put out a piece on this on Daily Effects as well yesterday. Look, this was a big region I was looking at, was 78.75, but we're coming into a level, and the levels just below that are stacked, which is why I'm not too comfortable sitting too much longer in an Aussie short. If you are holding shorts, the next levels we're looking at are 78.20, 30, this padded region here. A measured 1618 is 78, but a big pivot in price. Here's what the daily chart shows you. I just want to kind of keep that in mind. First of all, it's the 2016 high. Just right off the bat, a yearly high. Second of all, it's a basic 236 retracement from a much larger time span dating back to the 2011 decline. The 236 was perfect resistance. We broke through. We saw acceleration. The pullback saw support there. And here we are again. So major pivot in price. And just below that, like I said, is going to be that 1618 extension just lower at 78. So if you're holding shorts, this is the area of which you want to start trimming some off. Again, trim some off down here. And I would just be bringing my stops down to the previous opening range high for this session. So the Asia opening range high last night is basically like 78.90, let's call it. Now, you're probably noticing that I do have this pitchfork here on the intraday chart. This is something that I am looking at. We did look when we first rallied. This was the invalidation level for the bearish buy. So you guys remember that last week? Perfect. Yeah, quick throw over on the FOMC, but what's not to expect on something like that? And then the slam lower kept us looking lower. This was the major level that we were looking at yesterday. Obviously, we didn't get any type of material rebound. So if you didn't get a chance to get in, I don't blame you. But the decline... Now, like I said, coming in some interesting areas of which I'd like to trim short exposure on the way down here. All right, a break back above 78.75 is really what would mark some sort of near-term recovery in Aussie. Till that happens, you're basically looking for a slide lower towards 78.20, 78.30. Any questions on Aussie? Okay, moving right along. We went over Aussie. Number 5, we'll do dollar yen. So dollar yen was bull flag, as we suspected. Here's the top side break, and here's the subsequent push. 112.93 was what we were looking for as the initial level. The next subsequent level that you noted on the report yesterday was 113.50, and I said both of these are levels of which I'd actually be looking for some more stern resistance on the charts. Both areas of interest for exhaustion, possible short entries. So obviously there was no material pullback whatsoever here. We literally just grinded through. So next top side, just basic slope resistance and a basic pivot in price. You can see it's the swing high that you made there. Well, it is actually the concerted the June high. And certainly just a basic 764 retracement. If you stretch this into the 88.6, that kind of comes right into that region as well. I didn't want to crowd up the chart too much, but just to give you a picture of what we're looking for next, holding long exposure on dollar yen. If you are, that's sort of a region I'd look to clean some of it up. Major resistance on the daily charts does take you up into 1436, 1460. Huge level of significance. I don't necessarily think you get it on this stretch per se, but first things first, watch this region here. If we break 1367, it could be a quick shot right up into 1460. But holding long exposure, I'd be looking to trim some off into this region and then bring your stops up above the weekly opening range highs, which right now converges right on that 50 line. It's basically like 112.55. So let me do this. If you need to take a snapshot of these charts, well, actually the levels are unchanged from yesterday's update, but let me do this and just clean it up for you in light of the new break that we saw to the upside here. You can dump that. And the weekly opening range high, now in term support, right here. All right. That's the amended sort of cleaned up chart here on dollar yen. Just a quick reminder for those of you who may be new to the webinar here, you do have a camera button in the top of your GoToWebinar screen. At any point, if we're going over a chart you find interesting or you might want to reference later in the day, feel free just to click on that. It'll take a snapshot and save it to your desktop so you can always refer back if you need it. Okay, any questions on the dollar yen? Okay, Kiwi, it's important. Got the RBNZ on tap later today. What the heck to do with Kiwi? I'm flat on it right now. We were looking lower. We did get the break. We came into support, and it's kind of just hanging there. Yesterday we were slipping below that 72.50 level. We talked about the 100% extension. The I believe, if I'm not mistaken, the low day close. Is that what that is? Not quite. But the monthly open also comes into this region as well, just lower. So I think this might have just been a shifted line here. There you go. It's your monthly open and a 100% extension from the decline off the high. So doom, 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 2 equal legs takes you in this little padded region of support. So as far as the Kiwi is concerned, these are the levels I'm looking at. If we find some more support today and we manage to make it through the highs from Asia, tack on a quick retracement. I'm just going to do this for a drill right now to show you guys kind of like what we want to be looking at. Something like that. You know what I mean? Just to get a reference on what the near-term sort of upswing would look like. And if we were to get that, well, first, obviously, your initial target would be right here still at 72.46, same level. But a 38.2 comes in just lower, or just higher rather, somewhere around the 72.30 level. So if we were to rebound, this would be sort of the zone I'd start to look at again for some resistance. But from a larger standpoint for the Kiwi, I'm very not very confident as far as the continuing to favor shorts from here. And that would be if you're favoring a rebound, well, that would be dollar shorts, right? Is the dollar done? Again, we don't want to take a carte blanche opinion, but I do think you can get a bounce here in Kiwi. So my point being, guys, is heading into the RBNZ. Obviously, this is going to be our first meeting with the new deputy acting as head chair, as Wheeler's moved on, right? He's no longer there, so it's going to be interesting to see what commentary we get out of that. But at the end of the day, this is simply testing the monthly open support. That's it. I can't get too excited about the downside from here. So a little bit messy here on the dollar, on Kiwi dollar rather, but hopefully we'll get some clarity once we get through RBNZ. We get a more definitive break, either of a downside. You look for 71.30. Again, 71 is sort of a very, very nice spot. This is the 1618 confluence of the basic 618. Huge Fibonacci consideration. But to even start to look there, I would need to see a solid push below the monthly open. Questions on New Zealand dollar. Interest rate decision on tap later today. Okay, before we jump into the commodity block, I do want to take just a moment to talk about Euro Pound. It is a trade that I highlighted for you guys on Sunday. It's been a slow burner, which is typical. If you guys remember or have been with me for years, I always call this the grandpa trade because Euro Pound is very ATR is tight. It's a rich trade. It's expensive to hold and the pip value is decent, but it's a grandpa trade. A lot of times it'll take very, very long. No offense to any grandpas out there, but it takes a very, very long time to finally clear and make a definitive move. The major thing that we were looking at on this is this. On the daily chart on Sunday, we highlighted that, look, at this point, that 88, 50% retracement converges dead on with the lower parallel of this formation. Now, this slope is a long multi-year slope. This one's the new one. And we noted earlier in the week how these slopes are so very, very close as far as the angle. So basic convergence, okay, 88. If we were to see a downside break below there, which I favored, you'd be looking for a move on the 100-day, on the 200-day moving average, just above 87, and the 618 is just below 87, 86, 82. And you had a nice consolidation there, right? Some higher lows, some lower highs. Look for the break. Here's what it looked like on the intraday chart earlier on Sunday. The Sunday open right here on this vertical line. We were sitting right slap in the middle of this consolidation range off last week's lows. So, again, typically these can be continuation patterns. If you see a downside break, 200-day moving average is right here at 87.14, 618, 86.80. Well, again, here's what it looked like on the 120. Pretty decent consolidation. Well, we finally did get the downside break, but it's not giving us the momentum push that we want to see. That's the thing I don't like. You see this? What do I always say? When we see a clear of these formations, I want to see some acceleration. I want to see some push behind it. I want to see it run some stops. I want to see it cause that cascade move. Now, it's Euro Pound. So, again, I'm not a big fan of intraday trading this, but it was so clear that now you just got to kind of have to wait. I would have my limits again right above the 88 handle, and you just got to sit in it and wait for it to get down to that it's that 200-day moving average. At this point, the 200-day moving average has ticked a little bit higher. It's called that 87.17. So let's just pop this up a little bit. Just a rough estimate of where you'd be looking for is your first target. Again, 618 retracement. This is a longer-term key retracement of the entire advance. That's 86.84. Any questions here on Euro Pound? I know it's an interesting pair. We don't really talk about it too often, but when the clarity is there, I'm gonna bring it up. So it might be a slow burning trade, but making the right moves. Let's just say that. Any questions on euro pound? Okay, that's number 7. Let's jump into some of the hard commodities here. Gold, number 8. Here's what the gold trade looks like. So we came into the week still looking lower, well within this channel. Okay, we had our bullish invalidation level, or our bearish invalidation level right above 13. We made that rip, okay, higher, which certainly changed my opinion or outlook. I thought we would find support even on a move down to here to see a little bit more of a continuation. We didn't. I was completely wrong. Okay, we broke, and not only did we break, now we've broken the weekly opening range lows. So near-term things or near-term levels you want to just kind of keep an eye on. 112.81 is the 50% retracement. Remember, we just wrote our gold forecasts for the quarter. I told you guys yesterday what the outlook looks like for the longer term. For any of you who are trading this on a longer term stance, at the end of the day, whatever we see over the next couple of weeks, in my humble opinion, you stay constructive gold above 1240. So, the direction, or let me take a step back. The broader picture looks like this. Okay, you just worked with a major breakout of a multi-year trendline resistance, and the pullback is still following this decent slope to the upside. So yeah, you could see this drop lower. 1240 is my bullish invalidation level. As long as we stay above that, I do want to stay constructive on the gold trade. Near term, daily chart looks like this. Okay, objectively, guys, objectively, forget what anyone else says. Here's your September open. Here's your September opening range low. We broke the opening range low right here. It was on a convergence break with the basic trendline support off the low, and once he cleared below 1315, things look south. Basic opening range strategy suggests that you would look for that late month low. Well, we've only got 2 more trading days on the session for the month, so here we are at the lows. Next near-term target of support, there's 1240, by the way, our broader bearish invalidation level, right? It would also, for the record, it would also necessitate a break below the 200-day moving average. So it's kind of a big deal for me. Near term, the decline does seem like it has further legs to go. Now that we're back within the confines of that descending channel that we were looking at earlier in the week, that puts you right back on the short side. He broke below the weekly opening range low, further confirms it. So 1281 is going to be that 50% retracement. That's a soft target for me, just lower. You have that 200-day moving average, or excuse me, this is the 100-day moving average at 1270, and then you have that 38.2 retracement at 1276, or 1267. Let me move this down to 1270, which is again that 100-day moving average. All right. Any questions on gold? I'm going to ditch this retracement at this point. I don't really want to stress this slope. Let's just see what this looks like. Okay, let's work with that for now. Again, it would highlight basically that drop into that 100-day moving average first. Near-term resistance. Bullish invalidation would have to be a break of the weekly opening range high. And these are your new sort of amended levels here for gold. All right. Again, feel free to take a snapshot of that if it would help. So that's gold. I know Pete, was that you? Wanted to look at silver? Yeah, it was Peter. So Mr. Peter, here's what silver looks like. If I can keep my voice going. Silver. Where art thou, silver? I know I have a chart somewhere. Here it is. Okay, let's look here. Well, it can't be too long since I've looked at it because it looks like we did highlight the break of this last week with the move sub 1750, which was a basic 236 retracement, but it was also a very clean level of slope support. 1 touch, 2 touch, 3 touch, 4th. What happened when we saw the break? Acceleration. Happened to be a perfect confluence 236 retracement and further validation for the downside bias. Now, your September open is right here. So again, not only did we break support, not only did we break a Fibonacci consideration, but we also broke the monthly opening range low with that move. So inherently, you're still looking for that late month decline or that late month low in price. Near term, you are coming up against the 50% retracement at 1669, Pete. That's in line with another swing low that you made here late in August. So a possible level where you could see a little bit of a rebound. But let's take a look at what the daily chart looks like first. I would love to see some structure to this. Could be in play. It's not the cleanest thing, but I do like how, again, when we vaulted through the 50 line, the median line held, and then the 50 line held again as support before moving higher. That would put a little bit more of an attention or a spotlight on this piece right here, sort of around like 1660. Pete, and that's just below the 50% retracement we just noted. I mean, look, the immediate threat is going to be just for a stab a little bit lower, just on account of what you're seeing. And again, I just try to keep things as basic as possible. You made an outside day reversal off resistance yesterday. That's not something I'm typically going to want to fight right off the bat. Pete says he's long at 1680, stop loss at 1660. Yeah, I mean, 1660 is tight. You know what I mean? I don't want to encourage you to open up your risk more than that, but I could just tell you that, you could see it draw down a little bit. Look, the low from here, Pete, to put things in perspective, is 1658. You know what I mean? So give yourself a little bit of a breathing cushion there. But yeah, I mean, I would expect to see support hold there. I'm not thrilled with your entry, to be honest, but I would be expecting to see some sort of support bounce into this region. I would just hate to see you get wicked out on like 2 or 3 cents. You know what I mean? But just keep your eye on that spot, and that's where you'd want to see a first initial bounce. Wouldn't get too aggressive on it. Wouldn't get too aggressive, even on the long side of the trade. If you do get squeeze some out, don't get too comfortable there just yet. Pete, does that help? He says, okay, somewhat of a lower stop loss. In my opinion, yeah, just to give yourself a little bit of breathing room there. But the momentum profile, I mean, you've been making lower lows, lower lows, lower lows, higher lows, higher lows. Definitely is showing a little bit of a sign of an exhaustion here. It's just that break there keeps us focused on a low late in the month. So I wouldn't be surprised if this thing still jerks a little bit lower, heading into the Thursday, Friday stretch of the final week of the month. All right. Yeah, you're more than welcome, Peter. And that is silver, number 9. And that completes everything on my list. Guys, feel free to throw out any questions or any other trades that you want to review. A quick look real quick at Bitcoin. We finally did see the topside break start to materialize, and we're on our way up into our final target, which was 42.12, 42.25. Beautiful, beautiful confluence of the 618 retracement from the decline off the high and the 618 extension from the ascent off the low. You don't get much cleaner than that. Add to that, you have the median line, basic median line resistance right in there, and you are just, I mean, it's super clean, super clean. So looking for a drift higher in price, just another, what, $60 or so, which is seems like a lot out loud, but is not really that much for an Ethereum a Bitcoin trade on a daily basis. You want to stay constructive at this point. You want to raise your bullish invalidation level to basic slope resistance that we just broke through earlier. That's going to bring you basically into like 1736, let's call it. So as long as you stay above that, it was a perfect rebound off support. Yeah, there was China news. Yeah, there was doubts about Bitcoin and all this, and all that stuff flushes out real quick once you hit support, right? It's funny how that happens. So treat this for what it is. It is a risk traded asset, simply put. Okay. The headlines, the fundies, as it were called, if there are such things for Bitcoin, they're all just going to be short-term market-driven events. At the end of the day, people are trading this based on price, based on sentiment, and that's, still looks for the upside here. Request here for pound dollar. I can't believe we did not cover that today. Let's definitely take a look. That's number 11 on the session. Number 10 was BTC. Here's what pound looks like. So as I told you guys early in the week, and as I've been telling you, I like the pullback. I don't want to play it. Not interested. If the pullback gives me a good entry on the long side, that's what I'm looking for. Why? Because of the dollar crosses. This is one of the ones that I'm actually most constructive on. So I don't really, want to double up, long dollar exposure, especially versus pound, which I think, again, this is to be bought on a more conservative pullback. If we, or a deeper pullback, I should say, if we get a little bit more of a drop lower. Well, first of all, let me clean up this chart. Okay. So we were looking for confirmation of a turn, the downside break of last week's opening range, which I told you early in the month that, early in the week rather, that last week's opening range never gave out. In fact, FOMC, that singular candle for that 4-hour block, essentially covered the entire weekly opening range. So again, objective, right? Just don't even take anyone's word for it. Objectively, you set a high, you set a major low that you've been sitting in for over a week and a half. Once that range breaks, that's your near-term bias. Downside broke, does shift this lower. But the magnitude of the decline, I do not want to try to gauge. So I really want to see if this pullback can give me better entries near trendline support. I know it's a little bit lower, or I guess a good amount lower from where we are right now. I know that Jamie's looking for 34.35. Or an entry for the long side was 34.35 with a stop at 33.75. So, if we do, that's already been taken out. But if we do drop a little bit lower, I'd still be interested in taking a stab. You know what I mean? You got room here. Based on this near-term slope that we're looking at, that would put support right around here. Interestingly enough, if you take a retracement of that ascent, that turns out to be the exact 38.2 retracement. Boom. So some interesting stuff to look at. I know the initial trade didn't work there that we just took, but some interesting stuff to look at to suggest, you don't want to kind of give up or throw your hands in the air just yet. As far as, let me redo that. As far as the long side is concerned. I wouldn't even mind that 50, to be honest with you. Let's just keep it clean. There we go. Okay, and one other thing, just bear with me 1 second. I want to see what this looks like. Woo-wee! 1618 comes in right there. Where's the 100? We're sitting on it right now. Okay, so again, I don't want to clutter this chart up too much because I know it's already all over the place. So things to pay attention to. Forget the 629 high and the 50%. I don't even think we need it here on the daily anymore. Actually, what's this? Okay, drop this high. Okay, this is what I'll be working with. So, long story short, in my humble opinion, 3320 into 3260, 3270, both areas of interest for possible exhaustion and long entries. Okay, so on a spike, you saw the reaction there, you saw the resistance there, you saw the break give you acceleration, resistance, that converges right there into this region. I'd be looking for exhaustion. Okay, if you're holding shorts and you got a little bit more of a gutsy play on this one, again, the fact that it's the 100% extension, I wouldn't necessarily get hung up on it, and just go close out the position. You possibly get that drawdown lower, but I wouldn't be too comfortable while above 3320. Period. G2, does that help? Does that make sense? It's definitely an interesting play here on the pound, but for me, I'm waiting to buy still. Right, here's a daily chart, by the way. Part of the reason we were looking for this to find support here, give us that next continuation. So could see that drawdown get a little bit deeper before we resume higher. Two says yes, thanks. They are more than welcome. All right. Well, guys, if there are no other questions, we will go up and wrap it up here. We'll be back on tomorrow morning, same time, same channel. Keep in mind the midweek strategy webinar has been moved back till tomorrow. So right after the conclusion of the intraday strategy webinar, a couple hours later, Jamie will take the mic with the midweek to kind of give you a little bit longer term of approach and see where we are in the grand scheme of things. But heading into the U.S. trade session, you do get durable goods. You do get some of those oil inventories. So if you're trading, the commodities or dollar CAD. By the way, oil, we were looking at this in the last session yesterday. Remember we talked about 52.39? She's still holding like a ceiling, rock solid so far. It's the convergence of the median line and a broader 786 retracement. So watch this near-term range, okay, heading into oil inventories today, noting that there is strong here resistance at 52.40. All right, guys, best of luck trading. I'll see you all tomorrow morning. Cheers.